Welcome. A big welcome to the MarketFi community. It is just a few minutes after 4:30 on Wall Street, and we are all in for a major treat. We're very fortunate to have here with us a very distinguished guest, the one and only Mr. Eric Muate. And Eric is here to present this presentation, How to Use the MACD Correctly to Time Mega Moves. My name is Nathan. I'm on the team here at MarketFi.com. MarketFi.com is, of course, the web's only store where you can shop and compare the market's best trading newsletters and education. And when it comes to the market's best trading newsletters, that's a great segue to Eric Muate. You know, Eric came from Kenya to the United States to pursue his dreams, and that dream was to become a trader. And man, oh man, did Eric Muate achieve that dream. As a prominent trader, as a sought-after consultant to trading firms, as a sought-after consultant to hedge funds, Eric is a luminary in trading circles. He's famous for his advocacy of trading momentum stocks. What I really love about Eric is that he's an everyman's trader. He's a brilliant trader, mind you. He's a brilliant man. He has a master's degree in chemistry, but he doesn't have a fancy finance PhD. He wasn't brought up through a system like one of these Goldman Sachs systems. But what he does have is he has a killer instinct, and he has a track record of thinking differently about the markets. He learned to trade, he developed an amazing trading strategy, and he rose to the top of the game. And those are the kinds of stories that we love at MarketFi, and those are the kinds of stories that I think get those of you in the audience excited. Because of his humble, hardworking background, I've seen an unmatched passion in Eric. And Eric has such a passion to go out there. He's such a passion to help others and to trade and make it big like Eric has. That's why we're so excited to have Eric on MarketFi as a maven. On MarketFi.com, he runs the Educational Trader. The Educational Trader is a newsletter in which he issues trade alerts and daily videos with his insights to members of that community on MarketFi. It's an exceptional service, and that's because Eric Muate is an exceptional trader, and Eric Muate is an exceptional teacher. So here, having him teach us at this session is a very big treat. Before we begin, I want to advise you of a couple things. There may be some profanity laced into the presentation, so if you have any kids, make sure to put them away. I don't know, it might be a PG-13 R-rated kind of thing. Nothing vulgar or anything like that, but maybe a little bit of that stuff. And also, I want to let you know that if you have any questions for Eric, you can type those questions into your GoToWebinar chat box, and we will be happy to pass those questions along to Eric in the Q&A session towards the end of the presentation. So without further ado, I want to introduce everyone from his office in Kansas, Eric Muate. How you doing, Eric?
Hi, Nathan. How are you doing? How is
Excellent.
everybody? Thank you so much for that introduction, first and foremost. And also, secondly, thank you guys for showing up. I don't think we'd be doing this webinar if nobody showed up. We'll probably just call it quits and go home. So the fact that, there's traders like you out there who just want to see what they can learn from others and see what we can share among ourselves, see how we can improve our returns. So I appreciate you for taking the time. I know most of you are busy, if not, getting ready for Thanksgiving break and all that stuff, just day-to-day stuff that you have to go through. So I appreciate you guys for being here. As you heard, my name is Eric Muate, and I am going to be presenting a webinar here, how to use the MACD correctly to time mega moves. And again, I run the Educational Trader service here on MarketFi. And a little bit about myself. I was born in Kenya. I hold a master's degree in chemistry, and I've been trading these markets since 1999, and I've been running a website based on a subscription model ever since 2002. That's at muate.com. And I've had the chance over the years to find some amazing ways to trade the market using technical analysis concepts. And ever throughout the last 15 years or so, I've had numerous opportunities of interacting and consulting with traders around the world of all levels, from retail all the way to institutional types of traders, including hedge fund managers and even brokers, people of that nature. And since August of this year, 2013, I have been on the MarketFi platform under the name the Educational Trader. So that's a little bit about myself. Today, what we are going to be learning is how to use the MACD correctly to time mega moves. I would also like to start the conversation on learning or relearning how to use the MACD. I expect this to be about 25 minutes long with a session for the question and answers. So a little bit of a disclaimer here. This course is designed and intended strictly for educational purposes only. It does not recommend, advocate, or urge the buying, selling, or holding of any financial instruments. Trading and investing involve high levels of risk. Future results can be dramatically different from the opinions expressed in this course. Past performance does not guarantee future performance. So once we have that legal stuff out, let's move on here. And the idea here is to share so we can, grow together, and nobody has a monopoly on information. So I share, you learn from me, and tomorrow I'm gonna be learning from you based on your experience, so we can all build a community that can try and beat this crazy market. So the MACD. I'm not gonna go into the definition of the MACD just because there's a lot of material out there on the MACD. So everybody knows that the MACD is a moving average convergence divergence, and it sounds like a mouthful, but it really isn't much if you're new to this. But the idea here is I don't want to go and repeat what's available to everybody. So not the most confusing thing, it's just a bunch of moving average lines that we need to understand how to use. So most people will use the MACD as a crossover signal. In other words, you want to find a situation where the moving averages are telling you that the trend is changing, and once you see that crossover of the moving averages, then that could be a signal that the market wants to change, or the instrument wants to change its direction. And that's why most people use the MACD as a trend reversal signal whenever you see that crossover, and there's nothing wrong with that. The only problem is using that is, more often than not, it does not give you the best place to buy a stock. You'll see that you have to really understand how to use the MACD for you to take advantage of its awesome power. So what I would like us to do is probably rethink the MACD itself, because the MACD has a lot of ways we can use it other than the ones you're going to find available in books and also online. So just understand that there's a lot that the MACD can offer you once you know how to use it. So before we continue here, I want to remind everybody that if you go to YouTube and search for this series of videos, there are 6 videos here, a playlist which I made called How to Use the MACD Like a Seasoned Pro. You can be able to understand today's webinar. Today's webinar is more like part 7 of this series here, as we go into detail trying to understand the best ways we can use the MACD. And most of what you're going to learn on this video and in the YouTube videos is things that I don't want to use the word discovered, but things that I have myself come up with on how to use the MACD. It's not something that was taught to me. So this is something you're not going to find in books or online, other than on this webinar and in the series of videos. Alright, so now let me go ahead and deliver on my promise. How to use the MACD correctly to time mega moves. This is a radical way to use the MACD. The method is so simple yet very powerful. It can be used on any instrument, any market, anywhere in the world. This is perhaps your only chance to own high-flying Hall of Fame stocks. Let me repeat that. This is perhaps your only chance to own high-flying Hall of Fame stocks. You want to own stocks that have the power of the force pushing them higher. You want to be able to say, the force is strong with this one. You want to own championship stocks just before they unleash their awesome power. So let's go to the meat of this. Drum roll, please. So there's 2 easy steps to this method. Step 1 includes or has everything to do with price. So what you want to do is wait for prices to jump to fresh 52-week highs. And let me clarify that a little bit. If you're using a daily chart, you want the price to jump over here. You want the price to jump to fresh 52-week highs above the previous 52-week daily closing high. So you want to wait for that new daily closing high breakout here, and let me preface this, you need to demand at least 2 days of rest between this closing high and this breakout event. So at least 2 days below this price range. That's how you know that the stock has had enough time to rest and it is about to break out again and continue moving high. So wait for those 2 days of rest on a daily chart. On a weekly chart, what you want to do is wait again for this breakout above the previous 52-week closing high. So calculate or find out what the previous 52-week closing high is. Demand at least 2 weeks of rest on a weekly chart between this event and this event. You want prices never have to move above this closing high on the weekly. 2 weeks of rest, and then on the 4th week minimum, when the breakout takes place, then this is a fresh buy. So anything above more than 2 weeks is good. So if it's 6 months down the road, 2 weeks down the road, or 4 weeks, 2 years down the road, that's okay. But you want at least 2 weeks of rest between this event and this event here. That way you know you are buying stocks that have taken some time to pause before their next move. So on the monthly, pretty much the same thing. Wait for a breakout above previous monthly closing high. So you need to calculate the monthly closing high. And on the monthly, it's slightly different. You want to demand at least 1 month of rest between this event of the high and this breakout. So at least 1 month of rest here, and then subsequently it can break out 6 months down the road, 4 months down the road, doesn't matter. But it has to be at least 1 month of rest before this next breakout. Now, as far as the MACD is concerned, on step 2, which is where the MACD comes in, it is BTFATH. That's the method. And what do I mean by that? BTFATH. I'll just ask you guys, go ahead and Google it. It's an interesting topic, but it stands for buy the freaking all-time high. So on a monthly chart, this method works on a monthly chart. You want the MACD to move to all-time highs. So I'm gonna bring my own twist to this and add an M here. And so what we have is buy the freaking all-time MACD high, and that's the method right there. So let's recap. So 2 things have to happen. Price has to move to fresh 52-week highs based on the dailies or the weeklies or the monthly, depending on which one you're using. And then also BTFATMH. I hope that is simple enough. So let's take a look at some examples here. This is just a random stock I picked, but what I want to point out here is you can see the stock blasting out of here. So you buy the freaking all-time MACD high here, which is also see a fresh price breakout to new monthly closing highs. And then there was also another event of a breakout here on the MACD, which also corresponds to this breakout here in price. So there's two entry points here on this monthly breakout or on this monthly breakout. So at a price range of about 28, 29. And you see what happens since then. Since our entry here, here or here, the stock would go on to move from 29 all the way almost in a straight fashion to 75. And this is the biggest move the stock has had ever. Why? Because it met our minimum requirements here, here, and here. Now let's take a look at the NASDAQ. We're going to go back to between 1986 and 1995, and what we see here was a breakout in right there in late 91, which also corresponded with a price breakout there. So that was a good entry point at about 550. That's amazing. So that was a good entry point. Notice the market never looked back ever since this breakout here. It's been higher since then. There was another chance to own this market on a fresh breakout, and it's when the NASDAQ moved above 1,000. And take a look, this must have been scary to own the market that was making round numbers. Just like now, we see the Dow trading at 16,000, NASDAQ trading at 4,000, and S&P 500 at 1,800. So these round numbers, I am sure investors were really nervous here, thinking that this was the top. And also remember that they had the 1987 crash here just a couple of years before, so I'm sure this was a scary event. But take a look at what the MACD was doing. Buy the freaking all-time MACD high. You can see the price breaking out here to new 52-week highs, new all-time highs. So next is what happens is, after that breakout at 1000, which was somewhere here, take a look at what happened. The market actually stayed above that level, never looked back. Again, there was another entry point here in 97, middle of 97. Take a look at the Nasdaq now trading at 1500, almost 1 year later. Why? You can see the fresh breakout on the price. We got a MACD breaking out, so you buy the freaking all-time MACD high. So let's fast forward again. What you see here is the Nasdaq again. After this 97 breakout, there was another breakout here coming into late 98. Also happens to be a fresh monthly breakout, a move to all-time monthly closing highs there. You get your MACD breaking out there to all-time highs. So that was at a price of about 1800, give or take, and the Nasdaq would scream to its biggest rally ever. Why? Because it met our minimum requirements, as we are discussing here. So this is a very powerful method to find the most explosive stocks at their most explosive instance. Now, I already told you that this works on any market, so I want to take a look at a market from other parts of the world. Let's take a look at the Chinese market coming into Olympics of 2008. So you can see here in late 2006, early 2007, there was a move by the MACD to all-time highs there. Got a price breakout, and you can see, even though this was a very big move, very scary, moving to all-time highs, the thing that would have made investors a little bit not too sure to short this market was this here. This was a strong breakout on the MACD, so the price was breaking out, MACD was meeting our minimum requirements. Take a look at what happened next, and you can see from this range here, or even here at 3000, this instrument would go on straight up to 6,000. So that's a double in price, or in about 7 months, 8 months. Why? Because it met our minimum requirements of buying the fresh breakout in price and also buying the freaking all-time MACD high. So let's take a look at Apple here, and we're gonna go to earlier time period, late 90s and also early 2000. So you can see here in 99 there was this big move here that pushed the stock from $11 all the way to about $36 in under 7-8 months. Why? Take a look at this. There was a price breakout here, so that's a first requirement, and then secondly, you buy the freaking all-time MACD high here, and that was enough to launch this stock into this big run. The next time the stock becomes a buy is here, but before I do that, just want to remind you that I issued an alert for subscribers here on this stock when it was breaking out in late 2003, early 2004, based on other indicators. So we were playing this breakout here, but for the purpose of this webinar, we are taking a look at the MACD. And how to use the MACD here was this breakout to all-time highs here, which was also at a price of about $32. And then there was another breakout of the MACD here, which also corresponds with this price breakout. So you have two events, a breakout here, price breakout here, price breakout here, MACD breakout there to all-time highs. So what happens next is the stock moves from the 30s here and would go on to trade as high as 190. In fact, it moved from 30s here all the way to about $85. So it doubled in price here in about 9 months or less right here. Why? Because it met our minimum requirements here and here. So next time the stock is a buy is during this breakout here at about 89, which happens to be this move to fresh highs in price, and then also you buy the freaking all-time MACD high here. So that's another entry point, which moved the stock from $90 all the way to 190. Again, you double your money, you get your minimum requirements here, and also you buy the freaking all-time MACD high here. So that's another entry point, which moved the stock from $90 all the way to 190. Again, you double your money, you get your minimum requirements here, and also you buy the freaking all-time MACD high here. So that's another entry point, which moved the stock from $90 all the way to 190. Again, you double your money, in less than 9 months. Why? Because we are using the MACD to tell us how powerful the stock is. Take a look at Apple here again. The stock would go through this washout here, which happened to be the crash of 2008 here. So the next time the stock was a buy was when it breaks out to all-time highs here in September of 2010, which is this entry point here of about 230. So 250, 230, there was a fresh breakout there, an amazing breakout with a move to all-time highs on the MACD. And since then, you see the stock would go on to move. So we're talking about this period here, which happened to be this period here. So that met our minimum requirements, and you can see the stock would go on to move from 250 all the way to about 670 in very short order. And there was another breakout chance here in late 2011, which also happens to be at about a breakout of 400, which moved the stock from 400 all the way to the highs, current highs. So this MACD setup would have helped you time this stock perfectly. Let's take a look at one more here, and it is in the way of Tesla. Now take a look at Tesla here coming into April. We had a couple of things taking place. You got a price breakout to all-time highs above this monthly closing high, and also you have the MACD rushing to all-time highs. So it meets our minimum requirement to the price breakout, and here you buy the freaking all-time MACD high. Check. So we all know what happened after that. Tesla would go on to trade as high as 190 here ever since it met our minimum requirements there. So that's how powerful this MACD setup can be.
Eric, what can I say? It's been another wonderful presentation with you. You don't do these often enough. I wish you did them more often, but I know you're a busy man. And I want to leave you with the last word for our audience.
I'm going to say thank you guys for showing up. I really appreciate you guys giving me this opportunity. Nathan, thank you so much for being such a gracious host. And I wish you guys great Thanksgiving break. And hopefully we're going to be doing another webinar down the road here very quickly. Otherwise, guys, thank you for your time, and have a great evening.
All right. Thank you, Eric.
Thank you.